All right, we back once again. We're going to be going over last week's action, just sort of using the T levels, sort of how we played it, the general theories behind what's happening in the market. So hopefully this gives you some insight. And we're just going to use these T levels, essentially like pivot points, exhaustion levels, that kind of thing, to give us an idea of where turning points might happen, and then where we can sort of find a good spot to get in on the trends. And we're going to use last week, sort of our last week closing low, as our reference point, because a lot of people went bearish into last week's closing low. If you watched the video from last week, the recap, we went over what happens when you get too bearish into the weekly low, and you close in on some exhaustion points. So we closed in on this extension one last week, and they basically flushed the lows there at the open, and that was lights out from there for the bears, because what they did was they closed it in on the lows right into a Monday, which was beginning of the month. That was 401k flows. Okay, that's the pension rebalancing, and you can look this up. That there's every single ETF, every industry gets rebalanced on that day, and that just blows the bears up. It almost happens every single month, and then almost every single time that week, the market, at least recently this year, the market has been giving all those back, because what I call it is just a fake rally. It's just a structural thing. The pensions need to buy, they need to rebalance. The bears need to cover, because everybody's always super bearish, especially right now with the way things are. It's just a natural function. Everybody's short, everybody's got puts, everybody wants the crash to happen, and it never happens when everybody's ready for it, right? So always expecting these big rips off the lows, because as folks' puts expire, as their shorts get squeezed, you get this kind of move. So I was expecting a move at least to this level here, just because we had hit that target one. I was expecting this target two, maybe target one of the extension to get hit. Anyways, we're using that point sort of as an inflection point for me, because we ripped really hard off of that level. We took out last week's highs, and this is going to come into play in my future plan here. Is we took out last week's highs all the way up to here, and you can see what happens with the markets is they're able to orchestrate these squeezes. And then what do they always do? They always sell out of it, right? They always sell out of it, and it always feels really bearish. I mean, I don't know about you, if you were trading these, it's easy to feel real bearish when you're seeing this. But what happens is we didn't even close below last week's low. So that's always something important, is they were able to orchestrate enough of a squeeze to be able to distribute out of it, to be able to sell out of it, and still maintain sort of a bullish stance on the market, because you didn't even close below last week's low. In fact, you didn't close below last week's low, and you closed at exhaustion levels of all things. So keeping that in mind is, okay, we closed, it wasn't even that bad of a sell. I mean, we were down 100 and some points, but it wasn't that bad. If you're trading it and you're watching the flow, look how small these candles are. This wasn't just like a panic sell or anything like that. This was very orderly. It was very well set up here. And then they basically were able to just get out of their positions. I mean, I don't know, big funds, market makers, whales, or whatever. They're able to sell out of these positions into the end of the week. They get you to these exhaustion lows again. We didn't even break lower. I would say in order for us to have a really bad week, we'd have to gap down below this level and then retest it and then continue down to see a continuation down on the week. If we don't do that, it's most likely that we're going to be testing some exhaustion levels to the upside in the very near future. And so you can see there's my line here, and we're going to probably see a similar pattern. Probably going to see an extension move like this happening right here. They'll probably take you right above last week's highs again, get everyone all super bullish, and then dump on us again, just like they've been doing every single week. So be ready. I already heard some Fed pivot talking. So everybody's going to be sitting there, and their brain's going to be marinating with Fed pivot, because Bostic came out and said that they might think about putting a pause on rate hikes. So everybody's going to start thinking Fed pivot. They're going to orchestrate this squeeze again, and then they're going to start saying, nah, we ain't pivoting. and then it's going to just dump again. So be ready for that kind of talk too. Always be watching what the Fed is saying, because they're basically telling you what's about to happen most of the time. And if you're listening and you're paying attention, you'll start noticing the patterns with what they're saying. And again, you can start using these levels more for execution. And once you understand sort of what's happening in the market. So make sure to leave a like, subscribe, and check these levels out in the description. There's a link, and then you can go to tlevels.io. I think there's a free trial too as well. So if you have any questions on this, leave a comment. Peace.